Hello Turtle Army! In today's video, I will show you my 88% win rate strategy that has allowed me to survive the COVID pandemic. As you all know, the COVID had a great impact on the oil markets. As you know, I'm only trading oil at the moment, and therefore I had a really tough time surviving the COVID pandemic situation, because the price of Brent crude oil in particular, and also the other variants of oil such as the West Texas crude oil, fell by almost 70%, if not more. However, my current strategy has allowed me to survive and to thrive. My strategy is not very risky. As a turtle, I'm trying to move slowly but surely towards victory. So let me just show you the scoreboard of my account. So this is a recap. This is a 1 year recap of my account. So as you can see, here is my win rate. So the win rate is the percentage of your trades that are profitable. So that is 88%. This is the risk reward ratio and the disposition. Here you can see the on my screen you can see the definition. Those terms are not important. And as you can see from here, here is also a small recap of my account. This is a target. I'm not sure how the target is calculated. This is a tool that I use on my broker account. And here is the actual performance. So basically you can see the same values. Here are my winning trades, my losing trades, and the trade recap of basically all my trades. So this is what I wanted to share with you. Now let's move on to the strategy. My strategy is quite simple. First of all, pull the chart of your favorite instrument. In my case, this is the Brent crude oil. After that, select the 1-day chart, and you should be able to see something like this. This is a real-time data, and this is the current price of Brent crude oil. Please select the Ichimoku indicator and insert it on your chart. I can select it the following way. So you just click the Add Study button, and here you select the parameters of the indicator. You can go with the old parameters 9, 26, 52, or you can leave it like this. It is totally irrelevant. It's up to your personal preference. Now that we have the Ichimoku cloud, we are looking where the price is in relation to the Ichimoku cloud. So if the price is above the cloud, then we are going to look only for buy positions. If the price is below the cloud, we are going to look only for sell positions. You can completely ignore these weird line, these moving averages. They are not included in the strategy. You can completely ignore them. And now let's move on to the entry. The entry will be determined by the 3-day rule. What is the 3-day rule? I already made a video about it, but I will tell you that we are basically counting 3 days from a specific point. What is the specific point? Well, that depends on the candles that were formed 3 days prior to our entry. So here we have our current daily candle. Here we have the previous day candle. Are trying to detect the highest high or the highest low. And if the highest high or the highest low is not broken in 3 days, that probably means that the price will change direction. So let me give you an example. As I already said, this is the current day candle. This is yesterday's candle. So here we have the highest high, the most recent high. Why is that? Because this candle did not surpass the level of this candle, or not yet at least. And therefore I will consider this as my highest high. Today, tomorrow, and the day after, I will count 3 days. And if this price is still not broken in 3 days, that means that the price will probably go down. You can use the exact same logic, but for the lowest low candle, and in that case the price should go up if the lowest low is not broken in 3 days. And in addition to our strategy, we are going to use the major quarter point levels. The major quarter point levels are quite interesting because very often they correspond to either a support or a resistance level, and therefore we will enter at a major quarter point level and we will take profit at the next major quarter point level. If the price does not hit your take profit level, and if you see that your position is profitable, just take it, even if the next major quarter point level is not reached. Profit is still a profit, and you don't get poor by taking profit. And if you don't take your profit, the price will maybe reverse. And therefore there is no clear indication when you should take profit. Just take profit as often as possible while entering at a major quarter point level. What is a major quarter point level? Well, a quarter point is a quarter of something. In this case, it's a quarter of 1,000 pips. Let's say that we have a price of $55. So 55 is between $50 and $60, right? So in this interval, the major quarter points are 50, because that is the first major quarter point. It's a round number. The second point will be 52.5. This is the next quarter level, or the next level that is 250 pips above the 50 level. The next quarter point level, it will be 55, 57.8, 57.5, and of course 60. From there on, we start the second, let's call it big interval, 60, 70. So the first major quarter point is 60, and the second one will be 62.5. Since we already since the price of Brent is already at 61.3, I do believe that maybe the 62.5 level will be tested soon. And last, but definitely not least, we need to check our total investment, our risk percentage. This percentage should never ever surpass 20% in any circumstances. Ideally, you should be between 10 and 15%. You can go up to 20% maximum, but you should never surpass 20% in any moment, because if you do, you are starting to play with fire. The closer this percentage is to 100, the closer you are to a margin closeout, and you don't want your account to be margin called. Margin closeout and margin call, those are the same things. So you need this percentage, so you must assure that this percentage is as low as possible. This is why we are turtle traders. We are traders, we're not gamblers. We are risking a small portion of our account. We're systematic and we're patient. By doing this, money will come to us eventually. The only thing that we need to do is to survive, like I did, and continue trading. This is the most important thing. So that's about it. The strategy is not that complicated, and I do believe that everyone can apply it. Of course, keep in mind your personal goals, and you must understand that trading is very risky and you can lose your money at any given time. This video is strictly for entertainment purposes and also for educational purposes. So please don't blindly copy everything you see, because your capital will definitely be in risk. And if you make a mistake along the way, you can lose your money. So keep that in mind. Thank you for your attention. If you enjoyed my video, please click the like button. And if you have any questions, please ask them in the comment section below. Have a nice day. Goodbye.